Awesome. Well, good luck
Thank you.
on
Thank you.
that. How's everybody doing as everybody's jumping on? What are you guys thinking about this week? Got anything exciting to talk about? Jai, did you get your deal? Or did you
Wait,
get your
what
deal? You were
what
looking at
deal?
that deal in Bellingham. Remember, you were like, should I buy it or should I not? What happened?
Oh, I had to I got out of that deal because they ended up going like 20% over asking.
Okay.
It just didn't make sense. But I'm putting in an offer today, hopefully. Let's see, fingers crossed.
Fingers crossed. Good stuff, guys. Anybody need help with anything? We'll just jump straight into it. If nobody has a lot to talk about, we might jump off early today. Go ahead, Kevin.
Yeah, I've got a friend who's trying to sell actually a town, or it's actually a full-on home, single-family home in Bremerton off market, and she's currently got a tenant in there at 1,400 a month, but it's a little under market, and she's wanting to sell it at 350. So just wanted to put it out there in case anyone is buying in Bremerton right now.
I know a couple of people are buying in. What do you think the deal is? Is it a retail deal? Is it a buy and hold? Is it a flip? What is it?
It's more of a buy and hold, but it could use a little bit of work in the interior. I know she told me she needs to replace carpets on that one, so it's some like a cosmetic fix up, and then you just hold it for rent.
Why doesn't she want to list it for sale with you? Or, did you say she wants to sell it off market?
She wants to sell off market, ideally just like a quick close to, because she's wanting to invest that, like the proceeds from that, she wants to invest in another property she's looking at. So she can get it done a little quicker, then great, but she doesn't want to go through the whole process of getting it ready for market ideally. So, but I could definitely bring that up if
Is
she
the
does.
tenant month to month?
Right now, yes, it's a long-term tenant. It's been there for 7 years.
Okay, well, I know some people that buy in Bremerton, but I'll leave that to you guys. Anybody else got anything going on? Alex, what's going on in your world? You guys staying busy? Are you guys seeing, what kind of loans are you seeing these days, Alex? So Alex is with Certain Lending, which is our favorite hard money lender, as well as they have a 30-year loan for rental properties they can offer you guys. Right, Alex?
Yeah, so we have our usual short-term, like, fix and flip bridge loans, but that business is still going really strong. Seen a lot of action from everywhere from like Tennessee to Texas, even to like, Washington, Florida. So we're just seeing action all over the place. We have, ever since like the Fed instituted those new lending rules, like we have actually seen a bit of an uptick in demand for the 30-year fixed product, just because it kind of brings a little, like, our with our base pricing, right, we're typically going to be in like the 5 to 5.5% range. And for our 30-year fixed product, clients can buy that down by paying extra points into the low fours. In kind of a unicorn situation, they can get that down into like the high threes. So, we've had a lot of clients start coming to us because like that gap between what we can offer and what you get from conventional financing has narrowed a little bit.
Cool. And so are you still seeing a lot of wholesale deals and stuff like that come through, Alex, even with the hot market that we're in?
We're
Are you
actually
in
not
Washington?
Yeah, we're actually not seeing as many like deals with an assignment fee or anything. Like I'm seeing a lot of buyers that are just buying direct from the seller, or they're getting it off the MLS in some cases. Like I have not seen a ton of deals where the clients has a wholesale fee.
Right. I've been wondering, although I've been seeing a lot of wholesale deals coming out from people like Victor and some of those guys who's big wholesaler. And I'm like, how are these guys getting these deals these days? I guess it's the same old, distressed seller situation, or maybe I haven't looked at those deals. Maybe they're just putting under contract and trying to get them assigned to retail buyers and using brokers and stuff, which would be smart, right? If I was a wholesaler, I sure as heck would want to be selling to a retail buyer right now, who can just lower maybe their down payment and, cover the wholesale fees or whatever. I don't know. What do you guys think? Anybody seeing anything like that? Any wholesalers here in the group today? I'm not seeing anybody that's really a wholesaler here yet, that I'm looking at. What else?
Is Gus a wholesaler?
Is Gus on here?
Looks
Oh,
like it.
hey, Gus. Yeah, there he is. Gus
Hey
is a
guys.
wholesaler. Hey, Gus.
So
How's it
we're
going?
not seeing a lot of work, a lot of deals coming through at the moment, but you know, we got our marketing out there looking out for it.
Is the feedback from your sellers like what? Are you, maybe it's your list or something, or do you think that people are just knowing they can get top price? I mean, I'm seeing, what do you think? Go
There is
ahead.
a hesitation to, there is an expectation that the prices should be higher. We are seeing that. And
Awesome.
that they don't want to get, you know, they don't want to take it at wholesale rates. So just have to work around that.
Hi, Andrell. Where are you from? What's your story?
Hey, I am living in Bonnie Lake right now. Just moved here after living in Florida for last 20 or so years. And yeah, I teach music lessons, and I'm also looking to get into investing. Just started real estate, got my license a few weeks ago. So
Cool.
very
Well, congrats.
fresh. Yeah, thank you.
Good stuff. Welcome to the Pacific Northwest.
Thanks. But I'm looking for off markets in Pierce County, all the way up to Marysville. My team, I'm actually on Katrina Eileen real estate team.
Okay.
So they're based in Fremont. And since I'm living down here in Bonnie Lake, I'd like to help them expand south towards the Tacoma and just outside areas.
I know those guys well. Good stuff. Good stuff. What's up with you, Dion? What's on your mind this week, Dion? Dion McNeely, people. What's on your mind this week? I want to know.
Now two questions are on my mind. First, if Andrell teaches guitar lessons, I'm looking for somebody to hire. And second, I have a question for Alex. I keep getting the question of conventional loans with less than 20% down seem to be on a single family house, not too hard to do. But are there lenders that are doing that on small multifamily? I know a couple of years ago it was happening, but this year, has anybody heard of a lender doing less than 20% down for an owner-occupied small multifamily?
I think that's got to go to I think that's got to go like a conventional lender, because like, so for certain lending, right, we're business purpose only. Like we can't touch anything that's going to be owner occupied. So yeah, I think that has to go to a conventional lender, like that question.
So could
Well,
you do
Alex-
non-owner occupied less than 20% down?
No, so
Hey,
for
Alex,
us,
it's Charles.
Hey, Charles.
If you're combining second lien financing and first lien, the short answer is yes. And in Washington, if it's a 3 or 4 unit and the owner occupies one of the units, it's fine to go the business purpose option if you want short-term debt and you know aren't going to go conventional.
Short term though.
Yeah, like 12 to 24 months. You know, like we would do like a 12 or 18 month loan, Julie, on that.
What's up, Charles? Thanks for joining us.
I haven't talked to you in about a year. I thought I would drop in and say hi.
Good stuff. Well, we appreciate Alex has been doing a great job for us here, popping in and joining us every week. So guys, this is Charles. Charles is the founder of Certain Lending. This is honor to have him with us today. So any type of hard money or multifamily lending questions or any type of lending questions, we got both Alex and Charles with us today. This is, we're honored. Thanks, Charles. Certain Lending is our preferred hard money lender. We love those guys. If you guys haven't heard about them yet, definitely need to add them into your Rolodex. You know, the great thing we love about Certain Lending is that they give you the truth, right? If your deal is better served for a conventional loan or something like that, these guys are going to tell you they're not all after just for themselves. They're after helping people, which helps themselves. So thanks for joining us.
Yeah, and hey, Julie, just getting back to the multifamily question. When you're talking multifamily, are you talking 2 to 4 unit or more than 5 or 5 or more? I just wanted to clarify what was meant by that.
4 or less. I was just looking for lending options where the complaint usually seems to be coming up with 20% down, whether they're going to live in the property or whether it's going to be an investment.
Yeah, I mean, I'd have to go and check. I mean, I haven't worked at Freddie Mac for now 6 years, but when I worked there, you could get like more than 80% on a 2 to 4 unit under some of the, like if you're going to live in the property, especially, you could get up to 95% LTV. I would check on that. And I would also check on HUD. And, again, the nice thing about Fannie, Freddie, and HUD, while there are conforming loan limits that, in Washington will somewhat restrict you when you're at like 4 units, that limit is pretty high. So it'll cover most properties, 4-unit properties that you would buy in like Snohomish County, Pierce County, over on the peninsula. Obviously, if you're in Seattle or Bellevue, where you're probably pushing like, 400 to 600 a unit, it's going to be, Fannie, Freddie, HUD's not going to get you the LTV you want, but in kind of the suburban areas, you should be able to do it. I would check on that. And if you don't have a conventional lender, Albert Bowie is very good. Augie Bukowski is very good.
Dion, can you use a VA loan or no?
So I can, and really this is me trying to help people get into small multifamily. So like I'm always going to do 20% down or more, but that seems to be the barrier that stops everybody in their tracks. And that was what I was looking for, was currently what are lenders doing? Because like you said, 6 years ago or so, they were doing 5% down, owner occupied, but I haven't heard of that recently.
The rent, I think they can give you credit for the rent on the other side, right?
Right, for debt to income, they can. Right.
Yeah. Rent will factor into the debt to income calculation. But that's the other thing also that I don't know about right now is what used to be called the GSE patch. This was the kind of the carve out from the Dodd-Frank Act that allowed Fannie and Freddie loans to go over 43%. That's expired. I don't know what they're doing on that. So there might be a DT, in addition to needing to look at rents, there might also be a DTI cap that's folks need to be aware of. But like if you're talking to somebody who's like, works at Microsoft and they're buying a 4-unit property, you've got to believe they're going to qualify based on, the rents and their own income. But, at the end of the day, you just need to go through and, just go through the process if you want to use that option.
Yeah. What else? Anybody else gone through financing, small multifamily that put less than that down? I feel like, for some reason, I feel like that's doable, but
yeah, Julie, we're seeing a lot more seller financing these days. I don't know if you're seeing it in the market there in Seattle, but we're seeing it pop up a lot, where sellers are like, they want to get rid of a property, but they don't know what to do with the cash. And so they're willing to seller finance like up to like 85%, for example. So that's another, thing I would just encourage people on this call to, ask about. Like, it may not be an option, but often it is.
Always should ask, right? Every time, always should ask. You never know. And that also, in those situations might allow you to structure things where you could, pay a little bit more at the end. And, everything's negotiable, right? So, has anybody ever, I know Andy's in the process. Andy, what are you trying to get on your owner finance deal right now? And have you gotten one of those in the past on one of your multifamilies?
I have 3 seller finance deals and I'm working on a 4th right now. We bought a single family for ourselves, which we're renovating, that I bought in July, that, just like we do, drove by it, wrote him a letter, bought it off market, guy seller financed it with a down payment. And yeah, it just keeps working when you ask.
Right? All you have to do is ask. What's typically what you've had to put down on your seller finance deals, Andy?
It's ranged from $10,000 to $100,000.
And what kind of terms are you getting? Like,
usually somewhere around 2 to 3, but it's usually we try for 3 to 5 with like, take a look at 3, agree to move to 5.
as far as length of loan, right?
Yeah.
Right. And what kind of interest rate terms are you getting?
Everything we've done has been right around 4. I usually give quite a few options, to lay out different down payments with different interest rates and stuff like that. So it's just see what they take. The one we currently have, I have like the first year is interest only, second year is 4%, third year is 4.25%.
right? Because everything's negotiable, right? How do you, when you're offering the seller financing, when you're discussing that, Andy, do you look at like what their current situation is or if they have any debt there? I mean, all of them are owned free and clear or what? Or are you doing some sort of wrappy type stuff?
The ones that we have successfully completed, that people have owned outright, in the situation where I've always offered where people do owe something, I usually match my down payment to what they owe, or if that's possible, or something like that, just to get them out.
Yeah. Anybody else had success with some owner financing? It's a great topic. Everybody, it should just be in your normal pattern of, asking for it. Doesn't hurt, right? I always ask and I say, my interest isn't dependent upon it, but it might be beneficial to you, right? A lot of people say that they don't want to be landlords anymore, but that doesn't mean they want to give up their cash flow. They just don't want to be landlords and deal with that anymore, right? Are you seeing any of the terms on the owner, Charles, how are you guys seeing owner finance stuff? Why are those coming to you when you're a lender? Or why are you seeing those, I guess, Alex or Charles? You know what I mean? Because now they don't need you, or are you the taking them out?
I mean, so I'm hearing more about this just in, I chat with some real estate investors who are friends pretty often.
Yeah.
I'm hearing about it from them. I'll tell you what we are seeing more of is people looking for us to finance in first lien position with owner financing in second lien position as a substitute for down payment. One thing I will tell you, and I think most lenders like us are pretty cautious about this. We're very reluctant to accept seller financing in, second lien or junior lien position for a couple of reasons. First, we do like people we lend money to have kind of quote skin in the game, unquote. And then secondly, if it's an owner occupant who's doing the seller financing, if something goes wrong, it gets pretty messy sorting out a foreclosure situation. We haven't foreclosed on anybody, and we never would want to, but we have to think about risk management. And if there's a consumer in a second lien position loan, it's a little messy, and it can we can get into some regulatory challenges given we're a licensed business. So
I know the conventional lenders will not go in first and let you have a seller finance second behind it. They don't like that either.
Yeah, and we used to be that way 100% of the time. We will allow on an exception basis seller financing in second lien position as long as the person buying the property has some down payment in. Yeah, so I just wanted to bring that up as a cautionary point. We've lost some loans to owner financing, seller financing, which candidly, if a seller's willing to do it, you should take them up on it. Like, it's going to be cheaper for you than using a lender like us.
Right. Exactly. Hey, Andy, do you find that saying it a certain way, do you have have you honed your skills on asking for it, or you just simply ask for it and it just sparks a conversation? Or do you have some tips for anybody who wants to strike up that conversation? Is it simply like just taking the action to ask? I kind of feel it's probably more that than any finesse in asking for it.
I mean, it really comes down to relationships. Like, everyone I've bought a house, everything I've bought so far has been off market. And it just comes down to really like meeting the people several times. I'm not saying I'm not surprised when the people are like, yeah, absolutely, sounds great. But for the most part, it's just, creating that relationship, because they're not going to want to do it if they don't know me. And I'm, it's an investment for me. I don't need some wacky ass owner, which, I'm buying goofy old gross properties, a lot of wacky owners out there. So I'm very selective on who I would actually do it with.
Right. Right. Cause it's a marriage to them as well, right? On their side. It's kind of like, right. Are you finding the reason that they'll seller finance to you is because they want the cash flow, or for the tax purposes, or both?
It's across the board, especially when it comes to multifamily versus single family. The most recent one, the guy owned a bunch of property, didn't need any sort of money, kind of was into helping me out and get me into a bigger house for my family, all of the above. So yeah, just it kind of worked that way for that one. But yeah, so
Go ahead.
Can I ask a quick question?
Yeah.
Andy, are you with after you do the seller financing for the 2 to 5 year term, then are you refinancing with like a conventional loan? And if so, like how's that process for you?
so at this point, I have not refinanced out of any of them because I haven't needed to. The people have wanted to keep going. And I mean, one of them I've only been in for less than a year. Though the commercial one or for the apartment building I'm working on right now, it'll be interesting. But yeah, it's really just creating your own contract of what's going to work best for everybody in the group.
Right. I think probably there's oftentimes, I bet when you have a relationship that you've paid over time, even if your initial term was only 2 years, you know, that there's the ability probably a lot of the times to extend that because it's been a test of your ability to pay and pay on time and all that kind of stuff. Right.
Yeah.
Dion, you never go for owner financing if you're still there? He's probably stepped away for a minute.
No, I'm here. I haven't been lucky enough to find owner financing yet, but luck is because I didn't ask.
Exactly.
So that's my mistake constantly.
I'm challenging you, Dion, because I think that you're so credible and you have, you know, a portfolio also. I just think that I'm going to give you a personal challenge to go for it on your next few deals, just to see what happens, just to even ask, right? Because I think that you're a guy that would have a easy time getting owner financing in the situations where those come up. So I'm giving you that personal challenge there. Are you taking it?
Challenge accepted. I have a friend
All right.
who's buying a house, a duplex, and 2 RV lots on a 4-acre property that he's owner financing just because he stopped in and talked to the guy. And
Yeah.
It's a killer deal. So it's great.
And there's all kinds of extra terms. Speaking of, once you get going down that path, you know, that, well, I guess if it's seller financing, that's it. I mean, if it's a lease option, then there's other terms, but has anybody been doing any lease options? No? You know, I like the idea right now of lease options for people that want to do exchanges where they're going to have maybe a hard time getting their property identified on an exchange because they only have 45 days, right? And even you could get creative with it even on an apartment building, you know, like some sort of master lease with the option to buy situation, which then buys that seller time to go find their replacement property. And if you have a reasonable, you know, runway for them to do that, then you just exercise your option to buy once they have found their replacement property, right? I'm bringing that up all the time right now with just, you know, landlords that I'm calling. I'm doing a lot of cold calling lately to landlords. And if they even say, hey, I would, but you know, I don't want the tax thing or exchange. I might talk about installment sales, which is seller financing, or I might talk about a lease with the option to buy. You guys following me? And it gives that owner time to then go find their replacement property. You could do this with small apartments or any size apartments through some sort of master lease with the option to buy, right? If they're like giving you like, oh, I need to find an exchange. You guys following what I'm saying? Such a great idea and such a valid, you know, you just need to have obviously that spread on the rents, right? On an apartment building, maybe you make it that you could do anything. You could tie it to just like the gross monthly collection, you know, on a master lease. Anybody ever thought about stuff like that? If somebody's complaining about wanting to sell, but wanting to do an exchange or, you know, not wanting to take the tax hit, would be the owner financing easy solution, installment sale. I've heard some people say, don't use the word seller financing, use the words installment sale as a better way to talk about it and be prepared. What is the section 540, whatever, isn't it? That's 531 or 539, 542. I can't remember what it is. be prepared to hand them some information, send them some follow-up information about installment sales so they get to know what those are if they don't already know, right? But I do like the lease option ideas right now as giving runways to sellers who want to do an exchange, right? Well, how about we get it off your back right away? We'll just lease it from you with the option to buy, give you the runway to go find your replacement property. We'll have everything worked out ahead of time, price, contract, inspections, everything. And as soon as you find your replacement property, we'll exercise the option to buy, right? Maybe that's the seller giving the buyer that notice. Go ahead, Kim.
Yeah, so a couple of questions. That number you referenced, is that an IRS
Yes.
code? Okay.
Yeah.
And second thing is, with the lease option, does your lease go into the purchase price, or how would you structure something like that?
Well, I think anything's negotiable, right? That's the answer. There's that Dodd-Frank check on things, right? Where I don't think it would affect things, but that's probably a great Mariska question. I personally don't try and build, when I'm talking about it, I don't talk about putting the rent towards the purchase price. What I talk about is that the option fee is non-refundable, right? And so if somebody were to fail, that's a non-refundable fee that the seller gets to keep, right? And it goes towards the fact that, now they can, if needed, I don't know, adjust their price or something like that. They've already got money in their pocket. But I personally don't offer my discussions with rent credits back. That's something I would double check on with somebody like Mariska, just to be sure there isn't any type of, do you guys want to know what I'm talking about when I say Dodd-Frank? Compliancy type things where it gets construed as that there's some trouble with that. I can't remember. It used to be people did that all the time, and then I think it was like, oh, is that going to be recategorizing the lease option into something different that causes trouble for one of the parties? And I can't remember because I just don't go that way because I'm never clear on the answer, so I just don't even talk about it. But I'll follow up for you because now you've got me wanting to know the answer myself on that. Great person on lease options is a gal named Wendy Patton. Have you guys ever heard of her? She focuses on lease options. That's kind of her guru topic, I guess I'd say. Anybody else? Anybody else? As a broker, you can use lease options too. It's if you haven't, you can be a broker and you can use lease options as a strategy. I have all the documents for you on that. If you're interested, you guys can get that information from me where you can see how I wrote up a transaction. Not only was I the dual agent, but I did it as a lease option between the buyer and the seller. Really great to know that strategy, no matter what discipline of real estate that you're in. What else? Anybody else? Holly, how's it going?
Good.
Awesome. Picking up
Thanks
your
for checking in.
Yeah. How's it going with your land deals?
It's going good. I have one under contract. What's interesting is the land that has the septic on them, they sell within under a week per the data that I ran. And then a couple lots don't have the septic on it. So we might actually end up taking them back off, putting the septic on, and then relisting them because the value that you get back from doing that is worth it.
Another option is just to get the bid and the price and all that stuff where you have it available, where the buyer knows exactly, rather than them having to do the due diligence to figure it all out. It's right there for them, right? For instance, I sell houses that have sewer problems right now. Been doing that for a long time. As long as it's a reasonable amount, I just get the sewer replacement bid and I say, here's the bid, $5,000, right? As long as they have the information, don't do the work necessarily, and just provide them with the information to make a quick and easy decision. sometimes it's that due diligence piece that prevents people from taking action. So if you do it for them without actually spending the money to put it in, that would be, I'd say, a middle step to try before, having your seller put that in place actually.
Yeah, we're working on getting the quotes now, so it's in
Or you
progress.
can say another option is you just say seller will have the septic installed prior to closing, right? And your price is X, or if you want us to do it, we'll gross up the price, and now this is the sales price, right? With a little extra premium on top for taking on the work. That's probably how I would handle that situation, but that's just me.
Thanks,
What
Julie.
else? Anybody else? Guys? Anything? What's going down? Who else? Kevin.
All right. Can I just ask a question to
Sure,
Holly?
yes. Sure.
So, so these lots that you put the septic in, do they have utilities, the other utilities, the electricity, whatever, or are they brand new? Are they virgin lots?
This is for Holly.
Yeah.
The lots that we have right now for sale, they have electrical and water at the street.
So
Up the
not
street.
on property.
Okay, so close.
Yes.
Okay. All right, got it. I think I know. Yeah. Thanks.
What else, guys? Anybody else?
I got a good question for you guys. This is Darren. We found a realtor friend of ours found a nice potential flip for us, but it's I'm trying to figure out how to do a good estimate for it to talk. It's a little out of my wheelhouse in terms of it's been completely gutted and some of the framing's done, but so all of the drywall would need to be done, all the electrical needs to be done, and those things I don't have a clue about because we usually just do, we just fix the broken parts. We've never replaced the entire thing. So I'm wondering if there's like a calculator or recommendation for like square foot for things like drywall and other estimates for electrical type stuff, doing the whole house.
I don't have a number for you on that myself. I think best idea, is you don't have time to just bring a contractor in there. You know them, right? To get a bid.
I probably could. I just don't know if it'd be fast enough. I think this guy's trying to get out of this place in a hurry.
You're going to have an inspection contingency,
Oh yeah.
right?
And that'll
So-
be easy because everything's open.
Yeah, you might
Yeah.
put that somewhere on like WARI, that question. Don't rely on it, but maybe use that to, tie up the deal with an inspection and then go in and confirm it, right? I don't know that number, but I think people are more inclined to probably give a number like, if it's a complete gut job, if you throw out, like I have a gut job on a 1,800 square foot house, right, that needs all new plumbing and electrical, you might get somebody throw out some sort of ballpark big number on that rather than how much is the electrical. That's a very answer. It'd be more of a, I have an 18.
Yeah, just at this point, it just needs to be a ballpark because we're trying to figure out, what, estimate what our rehab's going to be. We know what the rest of it's going to be, but is it? Let's see, it's about 1,500 square feet, and it's only everything on the outside is done. So, but the entire inside has been gutted. So it's basically a big shell with a whole lot of skeleton. All
Right,
the framing is done and stuff. So
work with, right? It's almost faster to work with because everything's out. But I don't know the answer to myself because I'm not a general contractor. Kim, I don't know if you have any insight in that, but I would put a like WARI post out that says I got a gut job on a 1,500 square foot house. Exterior is good, roof is good. I just need all plumbing, electrical, and drywall, and all the other stuff, and let somebody throw out a ballpark. People like to answer those questions, right? And that gives you some idea, and then you tie it up and go confirm it once you have it under contract.
Well, the other thing too is don't forget your carrying costs while you're waiting for permits. Be sure and factor that in too.
oh yeah, yep.
Darren, you can also check out like I mean, if you're just trying to get a quick number, you can also check out, I mean, there's multiple sources, but something like Home Advisor or something like that. I mean, it'll be a rough, if you're just trying to get a completely rough estimate, you can check out those sites.
Where's the house?
It's up in the Cedro-Woolley area. Yeah,
You
way
know
up
who
north.
can give you an answer on that? For sure is Ruby Davis, who's up in.
Oh, I knew you were going to say Ruby.
Call Ruby. Yeah.
I do need to call him. I might even ask him if he wants to be my partner on this one.
He's a builder. He's doing flips. He's going to be able to help you out. Just call Ruby.
I've got another one for you. Martha Rose. She's a developer that used to be in Seattle. She now lives in Cedro-Woolley.
Construction builder, right?
Yeah, she's fantastic. I don't know how well you know Cedro-Woolley, but she built the development right across from the police station.
Nice.
Abbott's Alley. It's really cool development, and she's been a developer for years.
And
oh, cool. I know. You know the name of her company?
Martha Rose.
Oh, okay.
Yeah.
Cool.
She's easy to Google.
Yep. Doesn't she specialize? She used to specialize in like green or something. She actually built the house in front of my house down here.
Oh, did she?
Huh. Yeah, but I would it has an elevator in it and all this crazy stuff. Darren, for sure call Ruby.
Yeah.
Somebody's trying to get right on. What else, guys? What else is happening? Tom, what's happening out in New Jersey? Anything exciting going on in New Jersey?
Not really. Getting prepared for the holiday here. Nothing exciting going on.
Crazy market, right? So where am I talking about? Kevin, I know you talked to Bill Bronchek the other day. I happened to see your thing. Good for you, brother. I saw that. Good thing. That was the topic of bankruptcy and all that other stuff, which I've been thinking about too. Let's talk for a second about the forbearance and all that stuff. I was just thinking about it today, right? The forbearance is for FHA, right? Is that right? Check me on that. Is it?
Government-backed loans is my understanding, Julie.
But if you're on just a conventional, if you're just on a conventional loan and you're not with a government-backed FHA or government-backed loan, right? You're not under this protection.
I think Fannie and Freddie are, Julie.
Fannie Mae and okay, all of Fannie and Freddie. There's no way they're going to let people fail, right? With these, no, they're not going to. After all this time, they're not going to. In my opinion, all of a sudden, everybody's going to start failing. I was trying to get Keith on here today.
Julie, is the question about foreclosures at Fannie and Freddie?
I'm just talking about like who are the people that we think are going to fail in the future with all this, with all this forbearance and who are the pocket of people that are not going to make the cut, right? In regards to the future of loan. Let's say people don't have income or they can't modify their loan. Are they going to start forcing all these sales? Are they actually going to foreclose on them? What's your thinking about all this, Charles? Because I think there's so much equity out there. this is something I'm thinking about.
Yeah.
How are they actually going to let anything fail?
Yeah. So first of all, I don't think we'll see a spike in foreclosures nearly like what we saw from 2009 to 2013. Okay. The way loss mitigation is set up at Fannie Mae and Freddie Mac and also at HUD, the waterfall is to offer a repayment plan, offer forbearance, attempt a loan modification, and if those home retention options don't materialize, then to promote a short sale or deed in lieu of foreclosure, and then treat foreclosure as a last resort. Okay. Historically, Fannie and Freddie solve about 60% of their serious delinquencies through a home retention solution. I expect coming out of COVID that success rate will be closer to 80%. call it 75 to 80%. And then, but you will see some people, because of like permanent loss of jobs or whatnot, will have to go through foreclosure. Okay, so I think there will be a bump in certain states, but it won't be as nearly as severe as it was coming out of 2009. And who will be affected? It'll be people who have, again, long-term unemployment, so they just don't have the income to stay in the home, or they have that plus, a major life event like a divorce, or, a major health issue that's costing them money. Okay. So that's on the consumer homeowner side, I think will be affected. I also think that you will see some real estate investors who bought rental properties and have very low debt coverage ratios, very low cap rates. I think you'll see them affected also. Again, real estate investors who financed with like business purpose loans, and also real estate investors who finance with conventional loans. I think that if they can't make their payments, foreclosure on those guys or short sales for those guys will be much more likely. Now, the good news is we've seen a lot of tenants perform, at least in the loans we've made on rentals. And we think that, tenants will, so first of all, like the eviction moratoria are still out there. Secondly, we think unemployment is we think that people getting hired is going to really pick up in the second quarter. Like a couple of economists I've talked to think we'll see between 800,000 and 1 million jobs created in the month of April. And so to the extent that's happening and those homeowners are renting like single family residences, they'll be able to pay their rent. And typically people who are renting single family residences, they want to stay in the home because they have kids are in school. There's like psychological, familial reasons to not move. So on the residential side, does that shed light? I'll tell you, I can talk about the commercial real estate side if you want, but that seemed a little off your question.
Yeah, we'll skip that for now because I don't think there's a lot of commercial investors in here. But Kevin, I want to ask you on top of that, you are dabbling yourself in looking into what's coming down the pipeline, or what is it that you're thinking about, Kevin, in regards to people who are talking to you? And I know you're offering something in regards to some system related to credit or something like that, getting your stuff in order. Are you getting people reaching out to you saying, I think I'm going to have a problem. What should I do?
I am. I kind of do agree in part, mostly what Charles was talking about. As you and I talked about, Julie, I think it was a couple of weeks ago, we were having a friendly conversation. I think Keith was involved with it also, talking about how income's going to play in all of this. Because a lot of the economists, as Charles kind of alluded to earlier, is saying that, hey, we see a strong job market in the latter half of this year. And my question is, well, what type of jobs? Are these hospitalities? Are these service jobs? Or are these viable jobs where people can reassimilate back into the economy and have some type of quality of life? There's a lot of small businesses that are just permanently gone. So a lot of these quote unquote good jobs are not coming back. So what I'm seeing in my area is that there's people who have permanently displaced income and they don't have a viable exit strategy when this mortgage forbearance is going to expire. So what I think is going to happen, this is just my humble opinion, there's places like Hawaii or Washington where if you game the system, you can stay in your house for like 2, 3, or 4 years. We have an affordability crisis in this country. So people either who have equity or don't have equity, more importantly, when they come out of forbearance and they don't have an income, these people are not going to acquiesce and just give their property back to the banks. They're going to try to file a Chapter 13, but they're just going to game the system to stall, to prevent the banks from taking over their homes. And as a result of that, I think that's going to further exacerbate housing inventory because these people won't be giving their homes back to the banks.
Right. I think they'll ride it out. Like you said, like Charles said, they don't want to change the circumstances for their kids or whatever that are in a school, so they'll ride it out. I don't know. It's hard to even think that far ahead. It feels like every time there's going to be something bad that's going to happen, I feel like the government's going to stick a cork in it. right? So you don't know what's going to happen. I don't know. What do you think, Dion?
I try not to talk too much on this subject because I have such a contrarian view that everybody just attacks me afterwards.
Oh, let's do
But
it. Always fun.
so 2008 was people borrowing more money than they should with adjustable rate mortgages, banking on refinancing in 3 years if their interest rates went too high. And they found out they didn't have the equity, so they couldn't refinance. And so a lot of foreclosures happened. We don't have any of those elements going on now. Foreclosure, there's no estimate whether one person or 2 billion people would file for forbearance because they were told they could without providing any proof whatsoever that they were even impacted by COVID. So we have no data to base fear on. The only thing that can cause a crash or problems to happen with prices in real estate is time on the market. And everyone knows right now that the demand is so far above the inventory that a massive change would have to happen, something like 10% interest rates tomorrow across the board, no matter what, to have any kind of impact. And even that would be 3 months from now before it hit the market. So when forbearance ends, if a percentage of people have to file for foreclosure in many states, that's 700 days. And you can game the system and have several years where you're in the house. People have equity because of the demand. There's a bunch of cash people are trying to deploy because of the creation of 25% of our currency last year is going to create inflation over the next few years. So having cash or having assets that don't appreciate is a bad thing. So people are putting money into places like the story that came out a couple of days ago of over 70 cash offers over twice the asking price for that property on the East Coast. That's kind of happening everywhere. So it's, as investors, we all hope for some kind of a correction so that we can buy properties when they're on sale. But I don't see any of the elements that's going to make it happen other than people looking for the one-offs, the seller financing, the off-market deals. But it isn't like we're going to have all of a sudden a huge inventory that we can all just pick from like we could in 2010.
Right.
I agree with Dion, what he said, Julie, and that's why I didn't really talk too much about the DIY loan modification course that I offer. But one of the reasons was obviously to help people, but also from an investor standpoint, because the opportunity, and Dion, you may agree or disagree with this. I would be curious to see how you felt about this. The reason why I created that course is because that gives me a huge opportunity at off-market property. Right? If somebody is economically displaced or doesn't have the income and they try to get a loan modification to no avail, or they go through, so I think somebody called it, it's called the waterfall process, where FHA requires you to go through loan modification review even before you can go move to short sale. So a lot of these people are going to come through the pipeline trying to go through some type of loss mitigation plan. And then when that falls on its face, then they're going to have to look at the reality of an exit strategy. So I think the opportunity for all of us is going to have to come up with creative ways to try to get to homeowners who are distressed before they get to market. Because I think once it gets to that point, it's going to be a little too late because the inventory is not going to be there.
I feel, the whole like people want to delay forever. So the clincher is when you're talking to people, it's going to be, do they qualify for the bankruptcy? Because the bankruptcy process is what the stall process is, right? And so what is it? With Chapter 13 is the payment plan one, right? Not the liquidation one. But there are, you have to actually qualify for that. Does anybody know what the Chapter 13 qualifications are? You have to have income because you have to be able to show that you have a payment plan.
Yeah, there's some kind of means test in Washington based on your family size. I can't quote those statistics off the top of my head, but if anybody Googles that, it can tell you based on your family size and how many kids you have. This is the means test, and if you're below that means test, you qualify, and if you're over that, you can't file a 13.
Right. So when you're talking to people, I think like having the skill set to be able to help determine whether or not they can actually qualify or not. If they qualify, they're going to go for the bankruptcy. It's going to stall. It's going to be a long time. But if they don't, then you got a good lead on your hands, right? Because they don't meet the threshold of qualifying for the bankruptcy. To me, that I would want to have that in my arsenal going forward, knowing the details of who can qualify as much as I can for the bankruptcy Chapter 13 or not, right? I don't know if anybody has anything to add on that. Just talking about like filtering through your leads, or even if you're making, cold calls or anything like that, any type of stuff, right? Having that information and knowing that information is going to be important as you are talking to people later on down the line here when the squeeze gets put on, right? Which who knows when that's going to be. So I don't know.
Hey, Julie.
All right. Yes.
I have some insight from a group here in Southern California. We had a kind of discussion around this. There was an investor that was given the option to do forbearance, and she just took it because she was worried that she would lose some cash flow. So so this is across multiple banks. She called, and basically the options they gave her are 4 options. So the first one was to just pay off what she hasn't paid for, the forbearance. Second one is put it at the end of the loan. The third one is to be able to do that loan mod, and apparently it's very significant. So it's significant. I think she would save like $700 a month on her mortgage, and this is a free loan mod they would give her for, I think, 2 years or something like that. And the last one would be to even then extend it a little bit more, do another forbearance for a short amount of time. So the takeaway is
property though. Was this a rental property for her, a rental?
Yep, rental. These are all Fannie and Freddie, different banks, which is their pricing. The takeaways that I think is that banks are walking on eggshells because of current administration and all the kind of the rulings that have happened. So they are being very helpful working with everyone. They just don't want to get in trouble.
I agree, but in that case, there's a rental property and she can collect rent, and they know that there's going to be some income coming in. If it's somebody's primary residence though, and they don't meet the income thresholds of being able to make a payment plan, that's where I'm focused on. I think on rental properties, it'll be different because you can collect rent. They might be more willing to take a risk on something like that. I think with people's primary residence, not, like I said, zeroing in on who's going to be able to qualify for that bankruptcy to drag it out or not is where where my mind is going. I haven't jumped into it far enough yet or not, but I believe, like I said, in order to do a chapter 13, Kevin, maybe you have to have some income, right? So there could be like a series of 3 or 4 questions when you're talking to people, these homeowners that own their primary residence, that you're going to be able to tell. You're always going to want to say, hey, here's a reference to a bankruptcy attorney. Go get this checked out for yourself. That's your first step. But if you know enough, you're going to know that bankruptcy attorney is going to say, hey, you don't qualify for chapter 13. If you make a relationship with a bankruptcy attorney, I can give you a great one here in Seattle. It's Richard Symes at Symes Law Group, right? And knowing ahead of time, like, hey, this is a lead that I need to follow up on because I know they're going to go get fleshed out through this process. I'm going to hand them to someone that's going to tell them now, sorry, you don't qualify for chapter 13, right? You never know. They need to go to a banker. You're not an attorney. They need to check. But if you know enough, you're going to know, I think that, these particular leads, when it gets down to that squeeze point, are the ones that you need to be following up with more, because they are not going to qualify. And I don't know how they're going to get a loan modification if they don't have the income. So it's back to that income thing, right? Then their other option is just chapter 7, which would liquidate everything, right? And if that's the case, then, they need to know that too. And of course, they're going to write it out as long as they can. But, having those relationships with a bankruptcy attorney, I think is going to be important going forward, and knowing a little bit of detail about it yourself on who qualifies and who doesn't for chapter 13. I don't know. That's just my thoughts. I don't have a clue. Anybody else have anything to add on top? Kind of beating a dead horse on that one today. 12:26. I'm going to wrap it up because I'm starving and I have an appointment at 1:30. Anybody else got anything today? All right. Nobody going once. Go ahead, Kevin. You have something? No, you're good. All right. Annie, good luck with your deal. Getting that one. Come report back to us. Dion, challenge on, brother. Go get your seller finance deal. Can't wait. I'm sure you're going to do it too. All right. All right, guys, over and out, unless you guys have anything else. See you next time.